Hello traders, welcome back to the channel and a new video where we're going to be talking about the market profile opening types. There are four major kinds of open that we're going to be tracking with the market profile that's going to give us some clues and help us form strategies as far as how or what trading opportunities we need to be looking for on that day. Before we dive right in, as always, make sure to subscribe, hit the thumbs up, help the channel to keep bringing you all this free content. And if you want a lot more in-depth explanations as far as all the strategies with market profile, volume profile, price action, etc. that I apply in my own trading, make sure to check out my course page in the description. So let's first go over the general concepts, and then we're going to go into one of this one by one. There are four major types of opens like I've talked about before. For this, I'm going to be specifically focusing only on the regular market hours when it comes to trading futures or stocks. This is going to be from 9:30 a.m. to 4:30 p.m. Eastern Standard Time. Why do we only focus on regular trading hours? Where that is when we have the biggest participation from traders, both retail as well as big traders such as banks, hedge funds, etc. As we're going to go over the definitions of this. So these are the periods with the most significant information as far as volumes and what price is going to be doing. So by short time frame traders, we're going to understand that as the retail traders that are generally going to be using lower time frames. So if you're day trading, most probably is you're going to be using like a 5-minute time frame, maybe a 15-minute, but maybe 1 minute, or if you're using tick or volume charts, you're going to be using low intervals to look for shorter term trading opportunities. Then in market profile terms, what we know as long time frame traders, or what's called the other time frame traders, this is going to be the market movers. These are going to be actually big players that are going to be using mostly higher time frames like hourlies, dailies, or even weeklies, and they're going to be looking to position themselves for long trending moves. They're going to be breaking up their orders into sizes that are still large but small enough that they're not going to be getting slippage or bad entries. So once we spot where this market mover traders are going to be trying to get in and push the market to, then that's where us short time frame traders are going to be looking to getting in on those moves. And that's why tracking the opening types is going to help us get in with the right momentum or the right conditions to look for higher probability trades. So let's start off with the first type. This is what we call the open drive. This is a big momentum right from the open. Market opens sometimes above or below a previous day valley area, and again the valley area is what we would call what is known as the 68% of value. If we're looking at market profile, this means this is the area where markets spent 68% of the time trading within this price range. If we're looking at volume profile, then the valley area is 68% of the total traded volume for that session. But so here we have this valley area low, valley area high, and market will tend to generally open above or below the previous valley area and is going to trend with conviction. So as you can see, this market profile that we have here on the left side is going to represent this trading day. This is a 30-minute chart. I'm using this side by side just so you can see based on time-based charts as well how you could see the breakdown of this market profile. I'm using TradingView platform for this, but if you're going to be using another platform that lets you split the profile by periods, pretty much what you're going to be looking at is the same as if you were tracking this on a 30-minute time frame, because as you know, each market profile period is tracked by a 30-minute period in the time base. So for example, here we can see that in this case we had an open right at the low, right over here. Market gapped up. This, we're not taking into account the extended trading hours, so everything between 6:30 p.m. until 9:30 a.m. the next day is not represented here on this chart. We're only focused on regular trading hours, but you can see how we closed right here the previous day, and we opened well above the valley area and the previous day extremes, and then this was a very high conviction day to the upside, and you can see how we opened the A period right here, and we did not even go one tick below the open. We immediately just started trending up, and we pretty much spent, in this case, the whole day trending, and we closed right around this highs areas here. So open drive days are, again, very high conviction. The big traders are pretty much positioned in one direction, and low time frame and high time frame traders are in sync, pushing the market in one direction. It is risky to try to fade these days because, like we can see, you know, if you're just trying to catch a top on this day, you're just going to continuously get stopped out, as this is just going to be trending and trending in one direction. It doesn't mean it's going to be every day opening at the low, closing at the highs. Sometimes price will reach some kind of significant level, and then it could fail or reverse and close back around, you know, the valley area, etc. Okay, so those are the open drive days. These are the highest conviction days. Next up, we have open test drive. So these days we tend to open above or below the valley area and outside of the yesterday's trading range. So as you can see here, we have this trading day, and then we opened the next regular trading hours. We opened right here below the valley area of the previous day and below the low of the previous day. The open test drive tends to come back and test a key level. A lot of times it can be like yesterday's valley area high or low before the other time frame traders or the big players are going to reverse market activity. Tendency is for an early continuation and range expansion, as well as increased potential to reverse during the first half of the session. So as we can see here, we have a market trending down. We had a gap lower from the previous regular trading hour session, and you can see we open right here. We come up and test the valley area low from the previous market session, and then we just reject from that, and you can see it right here. We open right here. We came back to test this previous level of support from the previous day, tested back as resistance. We actually did not completely close the gap on the open that we had, and then market just continued pushing down for the day. But then you can see we did get into a point here right around the lunch hour time, and then where market actually reversed, and then we just finished off right inside of the valley area for the day. Okay, but the main thing again to know with the open test drive is that we'll generally open outside of the valley area of the previous regular trading session, and we're going to pull back and test some significant level. In this case, very common, we're going to test the valley area highs or lows, and then other big time frame participants are going to step in and take market lower, in this case lower in the direction of the original conviction of the gap or the move, in this case from the open. Okay, next up we're going to go into the open rejection reverse. This is a more common open drive setup. Market opens, rallies straight to a significant level, then fails to break through and reverses. Okay, so in this case you can see we have 4 regular trading sessions here, and you can see we're pretty much on a sort of a balanced area, and we have a very significant support level here, as you can see from all these days in this yellow area that I've highlighted here. And then on day number 4, right over here, market opens right here, and we had a drive down to test a significant level. In this case, we tested right here on this wick low, which is this right here. Let me just clear this up so it looks cleaner. We opened right here, which would be right over here. We came back and tested this significant support level, and then we reversed, and that was right here. We opened, test down here, and then we reversed, and again this was a significant level of support for the past 3 days. You can see all these lows from these 3 sessions. We came back into this level, failed to break through, and then we reverse. Okay, and in this case you can see that we did open within the valley area that we had from this previous days. So it's just a slightly different in that sense from the open test drive. And then the last type we have is the open auction. This is more of a non-trending day. Market opens within previous valley area and yesterday's high or low. There's a lack of participation from other time frame traders, meaning there's not a lot of big players that are setting any kind of trending moves with conviction in one direction or another. Market opens with a lack of momentum and stays mostly balanced for the whole session. We tend to form a balanced shaped deep profile, which gives us more opportunities to fade the edges of the valley area back into the mean or the point of control. So you can see we have more of a D shape session. In this case, we opened up here, which is right at this point, and then market just traded lower into this low. Then we come back up again, and we just pretty much just start fading the edges of the valley areas as it is developing throughout the session, and we're just sort of trending back and forth. So on days like this, the highest conviction is when we come in to test more extreme edges. It's more of tending to just fade this. So in this case, if we're near the highs of the valley area, we're looking to short back into the mean, into the point of control, which is the area with the highest acceptance of, in this case, of time that price has spent in. So those are the open auctions. And here, just for context, this profile corresponds to this day. But as you can see, I just put into context the previous 3 days as well. So you can see that overall, we were mostly in a balanced area right here. You can see several valley areas that are overlapping. And so unless there is high conviction and participation from other time frame traders to push this market lower, or higher, we're going to tend to just spend the day mostly balancing and just bouncing between the edges of the valley areas, as we can see right here. So these days is the least conviction. There's not a lot of trending opportunities to catch runners, but what we're looking for again is just to fade the extremes from the valley area and just look for trades going back into the mean of value or to the opposite side of the value area. Okay, so that's pretty much it for the video. Thank you all for tuning in. Hope this has been informative. Again, this is just a quick introduction to the market profile order opening day types. From there, you can form your strategies as far as what to do. And again, if you want much more in-depth explanations on this, you can check out all my trading courses and check out all the other videos and content here on my channel in the description. See you all in the next one.